Hi, happy Thursday, and welcome to The Hash. We talk about crypto news and why it matters here. There's 5 of us, and it's always a good time. I'm going to throw it straight to Ben Powers to start us off for the day. Ben, go for it.
Briefly, Will, who is holding you hostage? Like, what is going on? But anyway, happy Earth Day 2021, everybody. Totally. Today is Earth Day, and today on the site, I published a big piece that talked about Bitcoin and energy consumption, something that has been in the news quite a bit recently. So as Bitcoin has kind of risen in prominence and the price point has gone up, there's been a lot of scrutiny about the energy that goes into Bitcoin mining. Particularly, there have been a slew of articles critical of it and saying, you know, why do we do this? It's boiling the oceans, all of these other things. And I really wanted in this piece to kind of just take a step back and say, hey, look, if your first introduction to crypto was like Elon tweeting about Doge and NFTs, and it makes no sense, like I get why you might feel this way, but Bitcoin has a lot of value and it's a part of this world. And we need to consider the energy consumption that it does in relation to other things that we assume also have value. So that's really what I was trying to break down in this piece, and we can get more into it. But Naomi, I'll toss this to you. You got thoughts on this?
Sure. I mean, one of the great points you brought up in the article was looking at the traditional banking sector and how much energy is consumed there. So I think that you did a great job of kind of highlighting the inconsistency with a lot of people in the way they're thinking about things. Obviously, you know, a lot of people in their day-to-day lives, they're not really thinking about energy consumption. When they go to the grocery store, they're not thinking about all the energy that's consumed to get those groceries on their shelves. They're not thinking when they get into bed at night about like what energy went into producing their mattress or everything in their bedroom. So when you have people highlight certain industries and say like the Bitcoin industry consuming a lot of energy, it's using a lot, and people like they're kind of like, oh yeah, it is, without considering all the other things in their life that also are. And so there's this inconsistency with a lot of people, and you did a great job of highlighting that. You know, I think that it is a great question to think about. How much energy are we consuming? What are better ways to do it? But I also think that there's an agenda for a lot of people to discredit Bitcoin. And this is just a continuation of that. You know, we started out in the crypto community saying like, well, it's just drug dealers and it's just criminals. And now we're in the, well, it consumes so much energy, it's going to boil the oceans. And I just think that it's a continuation of that sort of narrative. And then you have people who haven't really thought about this saying like, oh, yeah, and they're kind of jumping on the bandwagon there. You know, I'll toss it back to you to talk more about like what you said in the article, but I think it is important that you note that so much of the crypto space is using renewable energy. So I think the figure you cited was 40%. And, you know, it's not like traditional industries which are planted and can't be moved. Bitcoin miners kind of go where the cheap prices are. And a lot of the cheap prices are in places where the energy isn't being used. Like Shenzhen, for example, you know, you have these hydro-powered facilities and their grid can only hold like half as much energy as the hydropower like dams are producing. So all that energy would just be going to waste. So a lot of the time when we think about energy, you know, consumption, we're thinking, well, it's all being produced for this purpose. It's actually not true in the crypto world. But then dive in a little deeper to what you were saying in the article.
Yeah, and I think, you know, you kind of referenced this, but CoinDesk Research published a report today talking about this energy conversation and problem in some ways. And the author of that report identified in their research that, you know, 40% of Bitcoin miners are using renewables in one way or another, and about 3/4 are using some form of renewables in their energy mix. And he also talked about the fact that like stranded renewable energy is one of the cheapest forms. And Bitcoin is just going to go, because it's mobile and mining is mobile, where the cheapest energy is and could really foster further development and use of that energy. So, but I think what gets lost in this conversation a lot is like Bitcoin is not just a separate society or world entirely. Like it is a part of this world. It's not just an energy cost being tossed on top of it, right? Like it has a purpose that goes well beyond the price point, which is often what gets headlines, but it's being used by people who don't have access to financial systems, being used in ways that are broadening people's ideas about centralization and about power, and asking really, really interesting questions about how we want the world structured, and kind of showing the pitfalls of institutions that we engage with on a daily basis. And I think when you start to bake in all of that value too, and all the ripple and downstream effects, it becomes a much bigger question than like, what is the price point of Bitcoin? And I think that's really where, if we're going to talk about it in those forms, then we need to also be holding it up to something. And I compare this to in the article, like the life cycle of an AI system development that goes into like Amazon Echo and all the materials and all the things that go into that, and what it takes to get that to your house, and then how often you like buy or throw that away, including the training of the AI systems that it uses. So all of these things, particularly in a heavily computerized society like we have, that's only getting more and more and more digital, like the energy that goes into computation is just going to increase. And so deciding what is of value or not is a much deeper conversation than I think, we're really having when it comes to some of the headlines that are getting printed about Bitcoin and energy. But I see you nodding, so jump in here with me and let me stop talking.
Yeah, no, for sure. I think this question of moralizing over block space it's kind of old, but it's coming to a new head with everyone jumping in the space as a bull market kind of takes off, especially with NFTs and Elon tweeting about it. I think it's interesting in the sense that we do and we should talk about green energy being a solution. But I think, yes, the larger point here is that energy consumption is good. That means more people are coming onto the grid. More people they have better lives, higher standards of living. The question now turns to, how do you make more energy more sustainable? And Bitcoin's asking a lot of the right questions, I think. You see with gas flaring across the Bitcoin mining space, especially in North America, where people are quite literally setting up Bitcoin mines on top of excess gas, natural gas that would just be vented into the atmosphere and increase the CO2 content and destroy the ozone. Instead, we have Bitcoin mines on top of these just flares that are open, and they're used for energy and for useful purposes like creating Bitcoin, which of course has its own use cases around the world. So I think it's asking the right questions. I think that, a smart piece to publish and very timely given Earth Day.
Yeah, and Jen, I'll toss this down to you to get your thoughts here on just kind of this whole debate. It's just something I've found so frustrating, and I feel like parties are speaking past each other and really want to reorient the conversation in a different way.
I really love how quickly the crypto community moves. There's now this crypto climate accord where a whole bunch of companies gotten together and they're committed to renewable energy. But I think it was 2030 you wrote in your report, Ben. And I just want to kind of juxtapose that with the fashion industry that contributes to, I think, more than a quarter of the world's carbon footprint. And they're not getting committees together like this. They're not really saying publicly that they're committed to renewable energy in the industry, and people are still going out and consuming fast fashion. So I think when we compare the industry to some other industries, there's actually a lot being done that's not being talked about.
Yeah, and I think that's the key. Will, take it away.
Yeah, I can add one more point to that. Just in the overall conversation, kind of like going off of what Jen's saying here, is that Bitcoin mining and Ethereum mining, or any sort of mining, is kind of generally what we're talking about when we're talking about the energy problem with Bitcoin or with a cryptocurrency. Those mining institutions typically move towards the cheapest electricity options, which historically are going more and more into the renewable section, specifically like hydro. Upstate New York, sections of China, the Pacific Northwest. Those are really heavy mining areas, mostly just because of hydropower.
Yeah, no, absolutely. Sure. Okay, well, we're going to transition. Naomi's going to take us to something completely different.
Completely different. All right, let's talk about what's happening with Binance's token coin, which is a stock coin that they released when Coinbase went public. So it basically represents the price of the Coinbase stock, and it seems that they might be coming under regulatory scrutiny from a US regulator, the Financial Conduct Authority, who've said that they are working with Binance to understand the product. And we've had UK, did I say something else? So UK regulator. So some red flags have already been raised by Hong Kong law firms who are looking into this. And the idea is that, if this is a security, it should be regulated and stuff. Binance, meanwhile, says they're fully compliant with everything across the world. But it does raise complex issues because traditionally stocks are not that easy to get as cryptocurrency. A lot of countries are going to be deciding their own rules regarding stocks and creating these walled gardens. They don't really want capital flowing out of the country, but they don't really want capital flowing into the country either, because it would, mean that outsiders would get a voting stake in a lot of these companies. So it's kind of this complex world, and Binance is really opening up the borders and saying, hey, this is going to be accessible to a lot of people. You should come on in. And a lot of governments are sort of taking note of that and getting a little bit, I guess, anxious. Maybe they're starting to dig into this. But I'm going to toss this down to Zack. What are your thoughts on this and the future of the coin token?
Well, classic case of innovation butting heads with regulators. This is a good one to look at. I think that there's going to be more experiments around these lines, whether it's security tokens or tokenized equity or whatever you want to call it. And the fact that these questions are being asked, hopefully, is a productive exercise going forward. Let's hope that is what comes of it. When this story was first reported, Binance had linked up with a regulated securities brokerage to make this product ostensibly compliance friendly. So if they can figure this out, if the FCA and also regulators in Hong Kong can iron out some of their concerns, then maybe the clarity for the next generation of investors will be there. But right now, this is still a very open question, and I hope they can hash it out.
Hash it out. And they're looking at Tesla tokens as well. So these token holders, they are entitled to dividends, as Binance has let people know, but they don't confer any voting rights associated with regular security. So it does make it quite distinct from a regular security. Zack, I'll throw it back to you.
I mean, it's kind of funny because this was probably part of the marketing pitch that Binance was rolling out. Hey, there are real stocks behind these tokens. It should be noted that there are other approaches to doing this, as evidenced by Mirror Protocol on Terra and whatnot, where you're dealing in completely synthetic representations of these equities. So the fact that what was ostensibly sort of like a check of legitimacy for this project is now sort of getting it in hot water is just another interesting note. I think, Will, you had something. Sorry to jump back in.
Yeah, no, I love the deck on this piece. It says that the FCA needs help to understand the product with Binance. So they're still trying to figure out what the heck Binance has going on. And I think you see that with a lot of these security token projects where it's just so complex, and it would take days just to work into what is a smart contract platform in the first place before I can even get to what is a tokenized stock. And so a lot of these projects, what they do is just you have a price oracle and it spits out a price, and then a firm like Binance works with another company that holds the stocks, and then that provides liquidity, and then you have the price somewhere else. And so it's just this convoluted mess. And the FCA is in this unenviable position where they are having to figure out what the hell this even is before they can even regulate it. And so they need Binance to help them out. And there's a lot of other protocols, Zack, what you're just saying, Mirror Protocol. A lot of people have been expecting some sort of hammer to come down on them at some point, just because the nature of the project is so complex and maybe crosses into some SEC lines there. But yeah, I just love that deck at the end. So I just wanted to point it out.
For sure. And it's worthwhile mentioning what CZ. Sorry, go ahead, Jen.
No, it was just some fun color. I just picture that GIF of the woman trying to figure out math with all of the equations roaming around her head when regulators are trying to figure out what's going on.
Exactly. Well, I mean, to put it plainly, CZ really spelled it out what he's trying to do there. And I think he said it in such a great way. He said that the exchange's foray into stock tokens demonstrates how we can democratize value transfer more seamlessly, reduce friction and costs to accessibility without compromising on compliance or security. And I just love that vision. I love that they've kind of steamrolled in. They're saying, yeah, we're going to get rid of all of these barriers. We're going to make this accessible to so many more people across the world. Don't worry about national borders. We're just going to be there doing our thing. And then people are really worried about this. Oh no, don't make things more free. And so I'm really interested to see what happens here. I hope that they make some improvements to the traditional financial system rather than it going the other way and it just regulators come clamping down on crypto. But let's go to a tease. Zack, what's coming up after the break?
Well, we're going to talk about the base layer wars, one of my favorite topics. Flow blockchain from the team behind NBA Top Shot is slowly adding projects to what remains a fairly empty walled garden. We'll talk about that after the break here on The Hash. Thanks. Hey, and welcome back to The Hash. I'm Zack Seward. We're going to talk today about the Flow blockchain, and I am working on a metaphor for the state of the Flow blockchain right now. All right, the Flow blockchain is like Nevada. NBA Top Shot is a bustling Las Vegas, and the rest is desert for now. But as is the nature with all base layers, they look to attract developer activity. They look to attract exciting projects. And Dapper Lab is announcing one such project that is moving over to the Flow blockchain. And that project is My Crypto Heroes from the firm called Double Jump Tokyo. So this is a small story, but it speaks to a bigger narrative. And I like stories like that because it's interesting. So the bigger narrative is, can base layers attract developer interest in a way that Ethereum did previously? But since Ethereum has become so crowded, other base layers are rushing in to sort of fill this need. So I think we're seeing this with Flow. Flow, obviously built by Dapper Labs, which, mind you, is reportedly raising money at a $7.5 billion valuation as we speak. They're looking to get a little bit more activity onto their new blockchain. I'm going to toss this to Will. I don't know if you've been tracking this at all beyond just Top Shot captivating headlines in the mainstream press and beyond, but how does this shake out sort of in, whether it's gaming dApps, whether it's NFT platforms? How do you see this shaking out with the Flow blockchain, in 6 months' time?
Yeah, for sure. I think it's a great topic all around. So there's kind of two visions I've seen from developers so far, which is the ETH2 route where everything is on Ethereum. Ethereum figures out how to scale, figures out this thing called sharding where you can have multiple blockchains talking with each other, but they're all based on Ethereum. Or you have the multi-chain future, which is the one that we're quickly moving towards, I think, just because there's this whole world of innovation that's not just limited to Ethereum core developers. And in the multi-chain block world, we have Cosmos and Polkadot and Ethereum and Flow. They're all talking with each other. They're all communicating. You have assets move across chain through these bridges. You have assets that can go into secondary solutions called rollups, and those can be their own ecosystems. And NFTs, DeFi, CBDCs, you name it, all lives on that multi-chain platform itself, that larger, like a grander ecosystem, but they all live like in different little neighborhoods. So one kind of similar analogy to yours, Zach, I saw was comparing it to New York City, where everyone has like a little borough, and Harlem's known for this thing, Brooklyn's known for this thing, Manhattan's known for this thing, in the same way that Ethereum could be the place for like where DeFi is, and then you have somewhere Flow is for NFTs, but Flow and Ethereum can talk to each other. You can move assets and money back and forth if you need to. And that's years away from happening. But I think you're right in saying like these smaller stories are kind of like the paving stones to the bigger highway that we're going towards, where we have like a small project. They're trying to pick up other projects. Dapper Labs used to be tiny. Now they're raising tons of money at a $7.5 billion valuation. And what do they look like in a few years? Really, it's all speculation right now, but I think that narrative is becoming more true day by day as you see these small stories pop up.
Yeah, I mean, that's the thing with Las Vegas, right? It was just casinos in like the 90s, and then you go there and there's like a bajillion houses there all of a sudden. So that could be a future state of the Flow blockchain, or it could be like the ghost towns of Nevada's back roads, but only time will tell. Naomi, what did you have to say? Sorry about that.
I think that I love your point, Will, about us heading towards this multi-chain universe. And I think that's absolutely becoming a reality already. I think it was yesterday, CoinDesk had on Eric Voorhees, CEO of Shapeshift, talking about how they're fully integrated with ThorChain now, which is like the first example of being able to, have cross-chain swaps without any intermediary. There have been other chains that have done something similar, but what ThorChain's doing is quite revolutionary. And I think that, it really, it's giving us a hint to this future, which is going to be this ease of transfer across chains without any intermediary. And it really brings us back to what the promise of crypto was. We had this idea of Bitcoin, this decentralized entity, and then we had Ethereum, this decentralized entity, and then we had all these other chains, and you have this decentralized world, but this decentralized world can't talk to each other, right? Without these centralized entities, which governments are cracking down on and shutting down and deciding what they can and can't list. And so it kind of did kill the hope of crypto. You were like, either we all go all in on just one of the coins, or, you know, we let go of this idea of this being a free world, and suddenly we're starting to see a glimpse of this decentralized technology enabling these chains to talk to each other. And I completely agree. I think that's the world that we're heading towards. And I think it was Scott Stornetta who he's like cited 4 times in the Bitcoin white paper, half of the citations for his work on blockchain tech. He said, you know, he sees a world where it's going to be multiple chains talking to each other. We're going to live in this multi-coin and multi-chain universe, and we won't even know what's going on under the hood. You just have these things working underneath, and you won't really know what's talking to what. It'll just happen automatically. But Jen, what are your thoughts on all this?
Well, I just had a quick question. We're talking about this multi-chain future, and can we quickly, I know we have to move on soon, explain what it actually means for the end user? Like, does this make things easier for them?
Yeah, so like the way I think about it is you can't get your Bitcoin to talk to Ethereum and have access to all the cool things that Ethereum can provide until now without what Naomi said, that trusted intermediary that's either wrapping it or turning it into something that represents the original value. So there's these networks that hold like a ton of value, but they sort of are very siloized until now. We're starting to see some of these cross-chain bridges, some of these permissionless cross-chain bridges, again, without the need for that trusted intermediary. And some of that stuff becomes really exciting, where, you know, stuff that lives on Cosmos can all of a sudden be exchanged for value stuff that lives on Ethereum. And I think that's sort of just in broad terms what's going on. And it's worth noting, I mean, this comes on a day where Bitcoin dominance dipped below 50% for the first time since 2018, which is interesting. Yeah, so you know, the share of the market value of Bitcoin is less than 50% of the value of the entire crypto market as Ether and other assets are pumping. So you know, I think we're starting to see the beginnings of what may or may not be a multi-chain future. Speaking of Ethereum stuff, Will, I think you're next, bud.
Yeah, I think you just used silo as a verb too, so that was interesting.
Thanks,
but
dude.
Moving over to, I don't, maybe you can use it. I'm not the editor. But MakerDao, their token MKR, which is a governance token, has boomed over $4,000, and I think it's at 4,500 as of filming right now, which is pretty remarkable, seeing as where this token came from over a year ago. And just kind of stepping back, what the MKR token does is it's a governance token for permissionless lending. So if you want to take a loan out on DeFi, you can go to Maker, you can deposit some Ether in a vault or a few other tokens, take out the DAI stablecoin, and then go use that stablecoin for whatever you want. You can even cash out of it and get physical dollars if that's what you want to do, or you can put it into another DeFi app and trade with it. Kind of the sky's the limit there. The interesting thing here is that Maker, after a really long time, has finally had a real world asset be used for taking out a DAI loan. So someone took out $38,000 in DAI based on some mortgages, which is pretty interesting just to see this blockchain world now communicate with the meat space. And it's kind of what we were talking about yesterday with the Louis Vuitton bag yesterday, Jen. So we're kind of seeing ways that you can force the two worlds to talk to each other. You just have to structure it very, very strongly. And like Maker has been in the works since 2016. I think it's the oldest DeFi application out there. So pretty interesting to see the MKR token just booming to over well over 4K now, and that the oldest DeFi application is kicking it. So giving it back to you, Zach, because you've been covering Maker for so long.
So long, I'm so old. Yeah, it is cool to see. I mean, I think this reminds me, at least, of the grand promise of DeFi. I think MakerDao like showed that you can put crypto assets in, get more crypto assets out, go back to the casino tables and make more money, so that the loan is easily repaid, right? So I think like most people are using these things to facilitate further trades. The more and more that we see DeFi facilitate financial use cases that are currently served by banks, the more and more excited I am about this sector. So the fact that this is happening in some way, shape, or form right now, like forget the token price right now. The way that this is interfacing with needs that people have in the real world as it relates to the world of finance is really exciting, and I hope we see more of these stories going forward.
I have a question. So, Will, how does this work, right? Because the maker holders, they have governance tokens, they can vote, and they're incentivized to choose things and choose collateral that aren't going to be too risky for the project. How do you assess something like an individual's mortgage? Like, I'm just wondering how the mechanisms of that work.
Yeah, so the mechanisms for Maker are very difficult to understand. It takes a while to kind of go through the documents, and the team behind it has a propensity for naming things very oddly, so that only adds to the confusion. But there is a process, and it's all open source. So if you want to go see how this works, you can just go into the Maker website. You can kind of peel through the documents. But essentially, what you have is a deed for whatever asset it is, and it is in Maker's name, and then of course the name of the person owning the asset. And I don't think it's the Maker Foundation, but it's out to the owners of the MKR token. It's a governance token, and I think it has some sort of cash flow equity associated with it. And so you put your deed onto the blockchain, of course, and then that deed is owned by the Maker community, and that person is able to withdraw equity from their mortgage that they hold. So there is a very rigorous and tested system behind this. It's not just a bunch of patchwork of developers putting this Jenga set together and then allowing you to take out stable coins. Like, there is a process behind it. It's fully audited, and it's a pretty robust structure. We even saw that last year with the flash crash in March 2020, where Maker, seemingly everyone thought Maker was going to dissolve. It didn't. It learned some lessons. It came back stronger, and I think the token's valuation is 4 times higher now after all the things that went through this last year. So that's about the best explanation I can give you on air. But if you're interested,
so cool.
Definitely go check out Maker.
It's so cool.
Yeah, MakerDao.
Like a deed on the blockchain, and it's all like all of the token holders, creditors for this. Are we going to start to see people like autonomous digital organizations buy houses and then decide who they want to rent to, and they all vote with their Maker? Is this going to be democratizing all kind? It's just super fascinating.
Airbnb.
Yeah, I think this is that incremental progress that's really promising to see, because it speaks to that larger vision being realized. And we were talking about this in the last segment, right? With blockchains kind of talking to each other. You're starting to take the Legos of all these different pieces and build this house or whatever you want to build with it. And I think that's really interesting to get that sort of real world reflection, Zach, that you were referring to, that we see in the traditional financial system.
Decentralize the government. That could be the next project, guys. Get on it, all you innovators out there.
Go for it.
Jen, take it away.
All right. Turkish cryptocurrency exchange Todex is no longer accessible. Its CEO is missing, and users are filing complaints alleging that hundreds of millions of dollars have been stolen. So users are, I can hear Ben sighing already. Ben, let me just finish. I'm kicking it right to you. The message that users are receiving when they are trying to get into their account is that transactions have stopped, so the company can evaluate a partnership offer. And the message says that this could take 4 to 5 business days. So at the time that the site was shut down, there was $585 million in crypto on the exchange. So this is a super sad story. Ben, I'm going to kick it to you for that big sigh. What do you got?
I mean, when we talk about tiering your risk and thinking about it and being self-aware, right? This is why we talk about that, because this is the stuff that can happen with centralized points of failure. And I think this is a very, very real world example of it. I mean, what I thought was interesting, maybe or not, was the fact that there was a message about a potential partnership, and that's why they had to halt all of this. That one's new for me. And there have been a wide array of ways that exchanges have gone offline. And there's just a lot of noise here and a lot of smoke. And I think we're just, we're starting to see a potential fire, particularly in light of Turkey cracking down on crypto more generally, and particularly on-ramps and things like exchanges. But Will, what you got?
No, I'm really interested to see how this plays out, because I think, what was the number I saw? 2 billion? Was that the number? Or is that wrong?
I think it was 585 million.
585 million.
Okay, yeah, I don't know.
Unless we're talking about a different number.
Yeah, what number? Number of times someone laughed?
Regardless, I think if you look at a lot of the DeFi hacks that happened this last year, a lot of these funds were found and traced back. And even historically, Bitcoin funds that have been seized from exchanges or hacked, they just sit in wallets and nobody can get that money out. So I don't really know what this guy's plan is, because you can track all of this information on chain, and there's not a lot of places you can run necessarily. The best hackers in the space, they flip it immediately into DeFi exchanges, and they continuously flip, and they put it through payment mixers, is what they're called, like Tornado Cash or Samurai Wallet, and then you can spit funds out on the other side. But sometimes even you can track funds through those payment mixers. So I'm not really sure what the end game here is, because I feel like more than likely he will just be caught with the wallet, and then the funds will be given back to everybody, say in a few years' time.
Mm-hmm. And there were warning signs, right? You had, I think it was so like certain coins like Dogecoin, apparently they started trading at like a much lower price than others, which was the night before the exchange. Yeah. The night before the exchange shut down. So already you're like, so what do these people know? Why are people not putting their money in? So that's interesting. But Ben, saw your hand go up.
I mean, I also think it's worth noting here, particularly in this context, when we reference like Turkey's kind of ban on crypto, but like this government does have authoritarian tendencies. Like that can't be overlooked here in relation to kind of keeping control of financial markets. And, Erdogan's like gone through many central bankers at this point, and that's caused like the lira to experience a lot of fluctuation. And so I think that's also worth mentioning. And part of the reason also that we talk about, decentralization being so inherent to crypto is to avoid and give people access to cryptocurrencies in governments like that.
Absolutely.
I think this is when the hash has to pivot to like Scooby-Doo, and we just like get on the case and we find out what happened to the missing Turkish crypto exchange founder. Because I think, that's the exciting thing here. This is legitimately intriguing. Like Ben mentioned the government theory. Will mentioned the rug pull theory. Who knows? So I think we got to get on the case and track this one down.
Let's do it. As long as
all the executives have gone off of social media. No one can find
but kind of came back this month and posted a statement. So it's a weird one.
Yeah, there's a statement someone posted. It is a real mystery.
Are we thinking rug pull? What's our gut on this one? Is this rug pull?
Seems like a rug pull.
There were some weird ones. Yeah, I'm trying to decide between like nefariousness or just plain incompetence. And maybe it's a mixture of both.
Probably not incompetence.
Yeah. I mean, the government is cracking down more and more. As you said, Will,
we can track this stuff.
I just think that. Sorry, go ahead, Will.
Go ahead, no, you got this.
I was just going to say, I think that the government is cracking down more and more. And so, it does put a lot of these businesses who've built themselves up in Turkey under a lot of pressure, right? They're about to lose everything because the government decides, we're going to ban crypto payments. And so I wonder what a lot of these businesses are going to do that have relied on this. Obviously, an exchange, they can probably still make money even if there's a ban on payments because you're just an exchange. But I mean, it's all the more reason why we need decentralized exchanges, right? So as we said before, bring on the decentralized world.
All right. Well, we're going to do that in our decentralized Scooby-Doo wagon, and we are going to get to the bottom of this one day. It's going to be fun. That is the hash for today, though. So we're going to wrap it on that note. It's Thursday, April 22nd. It's been fun hanging out with you guys. Naomi, Ben, Jen, Will. Hey, thanks so much. CoinDesk TV, 3 p.m., all about Bitcoin,
Zack.
if you want to stick around and watch that. And then otherwise, we'll be back here, same time, same channel for Friday. All right. Thanks for doing it. We'll talk to you soon.
See ya.
All right.
Bye.
See ya.